You're watching today's market comment by Haralabos Pisuros. I'm Christina Marujos, and thank you for joining us here at XM.com. The US dollar rose on Friday after the US employment report revealed that job growth in the US accelerated by more than expected in November, and that the unemployment rate dropped, prompting market participants to push back their Fed rate cut expectations. Expectations of a 25 basis points cut being delivered in March dropped to 45%. However, a reduction of the same size remains fully priced in for May, as with the last Fed meeting for 2023 on Wednesday and the CPIs for November being released the day before, investors may have thought that pushing further back their bets was a premature choice. Today, the dollar seems to be stabilizing, trading nearly unchanged from Friday's close against all the other major currencies except the yen. The Japanese currency is probably extending its slide due to a Reuters report on Friday, citing three sources familiar with the Bank of Japan's thinking that Governor Ueda's latest remarks on policy exit options were not intended to hint at a potential exit timing. In the absence of any new Bank of Japan-related headlines, dollar-yen traders may now lock their gaze on the U.S. inflation data and the Fed decision. Headline inflation is expected to have slowed somewhat, but the core rate is anticipated to have held steady at 4%. As for the Fed, investors will be looking at whether the new dot plot will point to more rate reductions for 2024 than the previous one, and whether Fed Chair Powell will keep the option of another hike on the table, or whether he will emphasize more on the prospect and timing of a policy pivot. After Friday's stronger-than-expected U.S. jobs data, Wall Street closed in the green with the Nasdaq securing the most gains. It seems that the prospect of slightly fewer Fed rate cuts next year did not discourage equity investors from adding to their risk exposures. In the energy sphere, oil prices have been in a recovery mode since Thursday, extending their gains today. This may have been due to efforts from the U.S. to replenish its strategic reserves, with the recent price weakness drawing U.S. demand of up to 3 million barrels. WTI is up more than 4% from its Thursday low, but it closed in the red for the seventh straight week on Friday as oversupply and demand concerns continue to linger. This was today's market comment here at XM.com. Have a great week.